It's time now for Better Money with Joel Johnson. Today we're getting 5 tips for surviving a volatile market. Sure has been up and down. Joel is a certified financial planner and managing partner at Johnson Brunetti. I know every day we do the noon numbers, and I kind of have to take a breath before I look at what the Dow is doing in the middle of the day, because it's been all over the place.
Right, they're big numbers now. It used to be, up 30, down 30, up 50,
it's
down
up 400, down
exactly.
500.
Yeah, it's crazy. It's very different. It's a different world.
So you have some tips, because people can get, especially if you're near or in retirement, this can really be stressful. So you want us to have perspective.
Right, and a lot of people, because their emotions take over, especially if you're already in retirement, they just do the wrong thing at the wrong time. And so we're going to talk about some of those things today, but the most important thing is keep perspective. The market is higher than it was 10 years ago. It's higher than it was 20 years ago. It's higher than it was 30 years ago.
Yeah.
So as long as we have a longer term horizon, we're not going to take all our money out and spend it all at once. We need to keep things in perspective.
And when the market's down, you have to think of it like stocks are on sale. You get to buy everything cheap. No.
Right, but seriously, why do we think of everything else in life that way?
Yeah, like here's
and that we don't
sale.
think, right, people want to buy when the market's high because it seems like it's going to go lower, and they sell when the market's going down. Everything in life, everything else in life, we do the opposite.
And that comes to your second point. We really have to know our risk tolerance. If you're someone who really can't sleep at night over this, then you have to evaluate how you invest.
Yeah, the biggest danger to any investor is their emotions. It's not picking the wrong stocks or picking the wrong mutual funds. It's the emotions that take over in times of greed, which is when things are going up and I want to, I don't want to miss out, or fear when they sell at the wrong time. So having your assets allocated in the right way, not having too much risk, having a good balance, so that you can say, like my dad did, over the holidays, he said, well, you know what, I know I've only got a little bit of money exposed to the market. The rest of my money is safe, so I don't really care what's happening with the market.
Yeah, because he's actually in that older, retired phase, so he's done some structuring. If you're younger, maybe you want to be more in the market. And number 3, you don't want to be timing the market.
Don't time the market. It doesn't work for anybody I've ever met. There's been very few actual hedge fund managers that have consistently timed the market over a long period of time, and I've been on those trading floors. None of us have a chance against those people. So don't time the market. Set up an asset allocation like we talked about and just stick with it.
Okay, so here's your plan and stick with it. And then don't stop investing. So right now, the market's been up and down, but if you are in a 401k or you're putting a couple $100 a month away for your kids' college, you want to just keep doing that. Keep buying the stocks.
Right. I can't tell you, Kara, how many times I've talked to somebody and they say, well, the market looks bad right now. I'm not going to put money into my 401k until it gets better. That's the opposite of what people should be doing.
Because you want the stocks when they're on sale.
Right. You should put extra money in while the market's down. Again, the same thing. Buying more when things are on sale.
Okay. And back to this, which we've sort of said, but really stick to your plan. That implies you have one to begin with.
Right. The key to sticking with a plan is knowing and having the confidence that you have a plan and have a good plan. The plan has to fit the individual or the individual and their family.
If someone doesn't have a plan yet, this is something that you can actually get a free consultation. You sit down and no judgment. People might come in and say, I really haven't been saving. I have credit card debt. So you want to get a plan.
Absolutely. You want to get a plan, and we deal with people of all types. People that have been great savers and they're just about to retire, they're retired. Other people that are just starting out in life, or they're trying to fix a mistake like credit card debt or something, and you need to have a plan, whether it's a plan to get out of debt or a plan to be ready for retirement.
That makes you feel better too. If you're moving in the right direction.
Right.
Then that's better than, okay, I have this big thing and I'm not dealing with it.
Well, and your previous guest was talking about baby steps. It's the same thing with financial planning.
Maybe you're going to save $50 more a month, whatever. So you've got an article, because this will help people just get perspective, and it's for everyone for free. It's Managing a Volatile Market. This is an article you've written. It's
a great piece. I actually haven't written it. It's through one of our service providers, which is Fidelity.
Yep.
But it's a great piece. It's got good research, but what I like about it is written in nice, plain English. It talks about what to do in the case of market volatility, which we are in right now and probably will be for the rest of 2019.
So it's instant gratification. To get this, all you have to do is go to bettermoneytv.com to get Joel's offer. It'll come right in your inbox and you can get reading, and maybe that's what you'll do if you're feeling a little worried about the numbers.
Yeah, and if people want to ask us questions by email, we'll answer every single one.
Alrighty, thank you so much, Joel.
Thanks, Kara.